For everyone, working in finance, working in New York is a dream. Suppose if I have total size of my portfolio is 10 lakhs, okay, there's only as much I can put in equity. Compare that to a portfolio which is 1 crore. You're getting an increment of say 20%. Your expenses should not go above more than half of it, which is 10%. Suppose I have taken 100 rupees of loan. If I'm able to generate net return of say 12%, I'm making 5% on bank's money. So it's completely, guided finance so that you don't have to worry about it.
Hi, welcome to another exciting episode of On Tap podcast. Today we have Ankit with us. He comes from strong 6-year experience of working with Wall Street. He is an investment banker turned entrepreneur and helps many individuals in India become closer to their financial independence. Today we'll try to dig deeper into his experience, try to get some knowledge nuggets and understand how some of us can become closer to our financial independence ourselves. I'll hand it over to Ankit, maybe say hi to our audience and then we'll get started.
Hi everyone, this is Ankit, founder of WealthUp, and very glad to be here and talking to Soumya.
Great. Ankit, you have a very interesting journey. You spent, I think you probably had one of the most sought after jobs, and then you spent 6 years there, came back to India, and now are helping a lot of individuals in India really with their financial planning. So talk to us a little bit about your journey. How did this whole transition happen, and what exactly WealthUp is all about?
Sure. So I was studying engineering at Pilani, and in second year, I was like, okay, I subscribed to Hindu. Okay, the newspaper, so that I can just improve my English, and that was going on. And then I heard, a few of my classmates, they were talking about finance, some recent event there, and that got me curious. I was like, learning English is one thing, and might as well do it in finance because general news is not something that excites me a lot. So I subscribed to Economic Times. It was very interesting, but I wasn't able to understand a lot of it. So I was like, chalo, theek hai, let's take few elective courses in finance. And as I kept taking courses in finance, I just found it more and more interesting. And I was like completely engrossed in it. And I was very fortunate to find my passion so early in my career. And after that, after completing my engineering, I got a job at UBS as an investment banker. I was in India initially, Hyderabad, and then I was transferred to New York. So again, an amazing journey. Lots of learning, and so for everyone working in finance, working in New York is a dream.
Exactly, and that was your first job, so I'm sure it would have meant a lot.
Yeah, absolutely. And over there, I got to work with few of the smartest people out there. And sitting in the boardroom overlooking Central Park and talking to CXOs of Fortune 500 companies, talking about their strategies, how they think about market, where it is headed and whatnot. It's a very different kind of high.
Correct.
This is mind-blowing. So that was life-changing kind of situation and experience. And after working with UBS for over 6 years, and so maintaining some financial discipline and all, I was financially comfortable, and I wanted to start something of my own. So came back to India, and now I'm running WealthUp, helping people achieve their financial goals faster.
So how does it work? Can you give us a little bit of inner workings of what WealthUp really does and how people can take your services or probably do better financial planning with your help?
Sure. So what WealthUp does is we understand your current situation, where you stand today. We understand your financial goals. Where is it that you want to reach? Like a GPS, right? And we also understand your preferences. Okay, like who you are as an individual, your risk profile and whatnot. And then we develop a completely customized, completely personalized path for you. And we also help you with execution, because this is another thing. Many times we, even when we are told, this is what you should be doing, humans being humans, say we'll do it, right? And it takes a backseat. So we also help you with the execution so that everything is actually on track. And then on later, once you have made those investments, taken those decisions, we also track it, monitor it closely, so that you don't have to worry about it. Okay, so I took these decisions, say 5 years back or 2 years back or whenever, and does it still make sense? Do I need to make any changes? You don't even have to worry about it. We are doing it for you. And as and when any changes are needed, we reach out to you. We tell you, okay, this is what you should be changing.
Got it.
So it's completely guided finance, so that you don't have to worry about it.
Got it. Talk to us about your own journey with your financial planning, and how do you, as an individual, approach personal finance and savings and investments, and how has that impacted the journey that you've taken career wise?
Sure. So I come from a middle class background, right? And I didn't know much about investing. But one thing that I knew very early on, is about savings.
Okay.
Whatever you are earning, it is important that you keep saving
Correct.
a decent portion of it, as much as you can without compromising your life too much, because it's also important to live life. What's the
Right.
purpose of having crores in your bank account and having
Not live,
you having
huh.
not done anything?
Huh.
So started saving, but didn't know what to do with that money. Took
Is there any general thumb rule for saving? Like, out of your income, how much percentage should you be saving?
ideally you should start with at least 20%, whatever
Okay.
net money that is coming to your account. At least
Okay.
20% is that you should be saving, but you should be striving if you can get above 50%.
Okay.
Okay, and of course it's not something that can be done like very early on.
Yeah.
It's like the best time to actually do it is every time you're getting a promotion.
Okay. Got
Okay,
it.
some thumb rules around that as well that we have developed.
Yeah.
A quick one is like, suppose you're getting an increment of say 20%, your expenses should not go above more than half of it, which is 10%.
10%.
So so that the impact on your savings is actually going to be higher, and the number 50% is something that you can achieve. A lot of our clients are already saving more than 50% of their income.
Oh, wow. And this is across age bands and across levels.
Yes, sure. So early on, it is actually more difficult, unless and until you are from a very tier one college and getting a very good paycheck.
Yeah.
Otherwise, it is difficult when you start, but slowly you can get there.
Got it.
And 20% is something that you should be doing, like preferably from the very beginning.
Got it. Got it.
So that is what I was doing, and when I was working for UBS, it was it's investment banking, like very time consuming job, 18
Yeah.
to 20 hours a day regularly.
Yeah.
So looking at your own finances is quite difficult. And so I was like, okay, of course I had the skill set. I'm working in that
Space.
industry and have a lot of interest as well. But time was something that was definitely not there.
Yeah.
So started making some investments and was not able to keep a track of it very well. And after I left my job at UBS, initially my plan was, okay, I'm not going to do anything for 1 year.
I think that's the exhaustion from the iBanking days.
High banking, right?
Yeah.
And but I got bored in like 3 months. Okay, I need to do something.
Yeah.
Right. So, but then I got more conscious about how my finances are structured and putting in more
Yeah.
time around it. And then I was like, okay, if I structure it properly, it can actually help me, achieve that financial freedom that something that people
Yes.
talk about. And so that is what I did. I'm a very aggressive investor.
Right.
But even when I'm taking a lot of risk, it is conscious risk. Okay, and before taking that, I have made a cushion for myself. Ki, even if all the risky assets are not performing well, my 3 years of expenses are taken care of
Oh, wow.
without any risk.
Okay.
Okay, so but that also allows me to take even more risk.
Right.
Right. So that's how I have structured my own investments and savings.
Got it. So recently, so we are also very active in the investment space, right? The whole product is revolving around providing fixed investment options to investors. And one of the interesting philosophies that actually one of our VC investors gave us was, why don't you, a normal retail investor, really the way one can think about investing is set up two types of investment buckets. One is your fixed income and second is equity. Equity is by nature very high risk, but fixed income is something where you can make predictable returns for an X period of time. And so your primary income should actually come from fixed asset classes, and whatever earnings you have there, you put only that 12%, 13% into equities, because even if you lose all of that, it really doesn't matter, because at least you have that fixed pool available which is giving you that predictable income. So that was another interesting way in which somebody can think about their
The
asset
percentage that
allocation.
you mentioned, the amount or percentage that you're putting in equity,
Yeah.
a big factor that determines that percentage is the size of the portfolio.
Right.
Right. If I have total size of my portfolio is 10 lakhs, okay, there is only as much I can put in equity, right?
Yeah.
Or only as much risk I can take. But compare that to a portfolio which is 1 crore, I can take a lot more risk.
Come.
Right. So based on that, it's like the cushion that I told you about, right? Once you have that in place, the money that is left beyond that, you can definitely put
You
it
can
in.
play with it.
Yeah.
No, yeah. We've also, how do you look at debt as part of somebody's portfolio? And when I say debt, I mean not as an investment, but actually as leverage. How does debt play a role as leverage in somebody's portfolio? And we Indians are, parents, and especially middle class folks, parents have always been saying, loan is the worst thing that can ever happen to you. Don't ever become indebted to anybody and avoid loans as much as possible. But how do you, as somebody who now helps a lot of people guide for their finances, how do you look at leverage in somebody's portfolio?
Okay. Before I talk about leverage in the portfolio, let's just take a step back about overall loans. What we have learned over the time. Generally speaking, many times what has happened is we think about so what the learning actually is, or what the wisdom is, if XYZ happens or if certain conditions are met, you should do this.
Right.
Many a times if we forget that it's conditional, okay, we just are left with, or something that we know or that has been passed on is like, don't do this. Right. Now that's similar is the case with debt. First of all, in debt, there are two types of it. Okay, there's bad debt, which what we have been warned of.
Yeah.
Okay, something that can leave you in ruins.
Right.
And there is good debt.
Yeah.
Good debt is something that actually puts more money in your pocket.
Correct.
So there are two things. First of all, knowing what a good debt is, and secondly, knowing how to use it.
Right.
Okay. I'll give another example from my own life. So some time back, a few years back, I bought an apartment for my parents. Okay, and I was like, okay, give me the maximum amount of loan that I can get on it. I didn't need it. I had the funds. I could have bought everything with the money, the money that I had. But I was like, no, I want it. Make it maximum. Make it for the longest tenure. Okay, so that I'm paying the minimum amount.
Right.
Okay, minimum amount is the EMI, as low as it can be. And why is that? As I mentioned, I'm an aggressive investor. Okay. Now, suppose I have taken 100 rupees of loan. Okay, and if I'm able to generate net return of say 12%, I'm not exaggerating or going overboard, 12% of return that I can make, and if the loan is at net 7%, I'm making 5 rupees or 5% on someone else's money, bank's money.
Right.
Why should I return it?
Yeah, absolutely.
Right. Now, few important factors here is, first of all, your own profile, whether you can actually get 12% or not. Okay, because 7% is more or less is going to remain around 7%, 8%. The number, whatever. Whether you take a loan, I take a loan, we are going to get it at a similar interest rate based on what kind of loan we are taking. The interest rate that the return that you can generate is going to be determining whether it actually makes sense or not.
Correct.
So if it actually makes sense for you, if you understand how it functions, it can actually help you a lot.
Yeah.
This is and so leverage. I'm saying I wanted to give this example because the humans individually, this is how they think about it. Because talking about borrowing money to actually invest in equity, I'm just giving an example. That's not the best idea.
Yeah, because in equities, you don't know how much you can predict the returns that you can make there. But somewhere where you know that 12% is bare minimum I'll anyway make, I think it's a good idea to probably take leverage as long as the cost is well within that.
Absolutely. And all the hassles that you're taking, you should be compensated for the return that you're generating.
Absolutely.
5% that I'm talking about, it's actually a pretty good number, right? And I gave an example of 100 rupees. It's not about 100 rupees. Like if you're talking about a crore, it does make a difference.
Yes.
And 5% per year makes a difference.
Yes.
Right?
Absolutely.
So once you understand that, then it can make a lot of difference.
Got it.
And it can work in your favor.
Talk to us about some of the learnings that you had from Wall Street, which actually shaped your career after and is currently helping you build WealthUp, or really the technical aspects of what you do right now.
Actually, more than technical, it's about the softer things.
Okay.
See, technical, of course, the skill set, the financial concepts, and Excel and whatnot, of course, those definitely helps. But couple of things that I learned over there, like the first one was actually genuinely being reliable. So, I say this quite often, if you are not reliable, you're not valuable.
Right.
And this is something that we practice. Actually, what I learned over there, how I learned. I was working there with people. So UBS generally has folks from Ivy League.
Okay.
So people from Harvard, MIT, Wharton, those are the folks that are working. And many times it was like my seniors, they wanted me to work on their deals.
Okay.
Of course, they built a team, so there are like 4 or 5 people who are working, and they wanted me to join their deal. So I was like, I'm sure I'm not the smartest person in the team, but why is it that I am being picked? Initially, like, probably availability and stuff. Then I saw that is generally something that is happening, and then I realized if I am being assigned any work, I'll make sure that it is getting done well, and getting done on time.
Okay.
So if something has to go to, let's say, a certain morning, even if I have to stay in office till 5 a.m., I'll stay there, make sure it is getting done before I leave the office.
Okay.
So that reliability is something, I was focused on. And now at WealthUp, it's like the people who are providing us service, providing WealthUp the service, be it Ankit, be it Medha, be it any, people inside or outside, like, in-house team or outsourced work, we would like to see whether you're reliable or not.
So that is your filter criteria for the people you hire.
Yeah.
Okay.
And this is on the receiving end for WealthUp, and this is what we also want to give to others, to our clients.
Right.
What that means is if I have told you I'm calling you at 6 p.m., it means 6 p.m. It doesn't mean 6:01.
Okay.
Okay, so that reliability, is something that we are, building towards. And one of the metrics that I kind of look at is whatever discussion I've had with any of my clients, you should never be in a position that you're following up with me.
Okay.
If I have, we had a discussion, okay, in 2 days time, we'll get it done. Things can happen, of course. It's not that 100% in 2 days, because particularly if things are not in my control.
Right.
What is important is I communicate, I get in touch with you. Okay, Soumya, XYZ has happened. We are trying to get this done. It may take 2 more days, but I'll keep you posted. Okay. So that again, what I am expecting from the people who are giving service to WealthUp, that is what we are also trying to deliver.
Right. So I think it's a very important aspect, right? And sometimes what happens is when you hire people, you can discount them a little bit on not knowing a few skills or not having really good domain knowledge, because that can be built over time. But
Absolutely.
Reliability as a trait is something that you come with, right? That's something that you have to offer on day one, and there's no compromise there. So that,
and you're working in finance, right? So it becomes even more important.
Exactly. So I think that's what really defines you from anybody who's not probably as good or good from best. But one thing is, how do you actually identify reliability in somebody during the process of hiring? How do you judge that? Because it's very difficult to identify.
So first step is actually informing them what that actually means.
Okay.
Because say someone is just starting their career, they don't even know what that means.
Right.
And if something is important, okay, what if I'm just 5 minutes late? Then I'll do the job.
Yeah.
Right. But just first of all, telling them this is what the expectation is. Okay. So our orientation process is relatively long. We tell you actually what the expectations are and what you can expect from us.
Okay.
Right. So that people are actually aware of it, and we hold them accountable. Because again, things can happen. If something didn't go well, if you are not in a position that you could inform, that you couldn't join a meeting, fine. It happens once. We'll have a discussion with you what happened. Okay, but if it is something, that is habit, even after we have, clarified it, okay, then we probably, our values, our working style doesn't match.
But so this happens in the process of hiring, or how do you take care of
so
it?
we have, whenever we hire anyone, we have a probation period. So first of all, of course, the orientation is there so that expectations set right.
Yeah.
And in the probation period of, depending on the position, it's generally 1 month or maybe 2 months, we figure it out.
Okay. Yeah.
Because it's not too difficult. It's like if that is who you are, that is who you are.
Yeah, it'll show very soon. So I think that helps.
Yeah.
You've worked in the US, you've come back to India, and you worked here. So tell us, what are the differences that you saw, both in the professional setting and how you deal with people, how you deal with clients? Like, what really is the difference that stood out for you?
One aspect in India is like ki chalta hai. Right?
Yeah.
Ki, theek hai, I'm just 5 minutes late, right? Or things like that. That is something that is not generally you can expect in the US.
Correct.
Right? Everyone is upholding, themselves to a sort of a high standard.
Right.
Okay, and that's what they expect from others. In India, many a times like we expect something from people, but we ourselves don't deliver that. Okay, that is on the working side. Okay, how people function. Another thing is ki generally the importance and the balance, the work-life balance, in a way, is better. I'm coming from investment banking,
yeah,
right?
And then you're saying it.
Ki just Okay, for the work pressure is there. By the way, I was working 18, 20 hours a day, but I can never ever blame the company that they made me work this much or there were any mismatch in expectation. They were very clear when they were hiring me. Okay, this is what the expectation is. This is what the normal working hour or lifestyle is. So I mean, when it was very clear, I can't really raise, which I willingly chose it. Yeah, okay, I'm working these many hours, and I know why I'm working. I'm working, of course, I like the work, but apart from that, it's also money. I mean, investment banking pays you really well, right? So I'm, these two things are what I'm getting in return.
Right.
Okay, and so even when when you're working, even those long hours, everyone is like working long hours. The way the expectations are, the way you're treated, and your preferences, individual own needs are understood is different. I mean, it's just that I think those boundaries are not as clear in India.
Okay.
So yeah, that is one difference.
So which one did you personally like better?
I am a more process-oriented and running by the clock kind of person, so I preferred the style in US more.
Okay.
So,
but how did the whole decision of starting up happen? Because I'm sure it would have been going really well for you there, and given that your choices aligned very well with how everything was there, even the role and the space and kind of people you were working with, how did this decision really happen?
So when I was in college, I was like, so I'm a Baniya, Agrawal, right? So I was like, okay, I want to start something of my own. And even before, my placements or anything, like second, third year or something, I was like, okay, I will work for 5 odd years.
Okay.
Okay, and I'll start something of my own. I had no idea what kind of job I'll be doing, and I had no idea what business I'll start. I ended up working for a little over 6 years. And then I was like, okay, at this point, I can still take the decision of leaving this job.
Right.
I was single. Took care of all the responsibilities that were there. I mean, coming from middle class background, there were certain financial responsibilities I had. I took care of them. I was in a comfortable position, financially speaking. I was like, this is a point in time where I can take that risk.
Right.
So I took.
Okay. So it was purely like a decision which you'd made well in advance, and it was just a time to execute it.
Yeah, kind of. And it was like, okay, so if I continue working, the checks are just going to get fatter.
It'll become difficult to leave.
Yeah, just more and more difficult to, leave.
Got it. Can you talk to us a little bit about what kind of users do you typically acquire, and some interesting nuances, insights into their behavior and what you've learned?
Sure. This is, something that we didn't start with. It was a very organic process. And before we started WealthUp, we talked to a number of people from 9 different countries just to understand their relationship with money.
Okay.
Money is, as a concept, is very new to humans.
Okay.
Right? So the relationship is not very well understood. So, but I wanted to understand if it is just Indians who face these challenges, because Indian, financial literacy in India is pretty low. So we talked to people, and we understood, okay, this is something that exists across the board. And then we were like, okay, so what kind of people will actually understand and will have, a need for it? Now, there are so many platforms that already exist, right? In last few years, maybe a decade or so, there are so many platforms that have come, so many products like, Tap Invest, and a number of, that gives access to everyone, very easy access.
Yes.
They can invest in whatever, they want to invest. Now, we were like, is there a place for us? And if that place is there, what is it? So we, discovered it. Okay. Who would need the service, and what will that service look like? So we understood people who are broadly in the age bracket of 25 to 40 is something, as a TG that we look at. A lot of people have suggested you should start sooner. I was like, when people have just graduated, they are, I would like to do things on my own. But in the 2-3 years, they understand that there is a need that someone else actually guides them.
Correct.
And we focus on people who are not looking for a DIY.
Okay.
Okay, because if you want a DIY, if that is what your preference is, there are so many platforms, you don't need us.
Right.
So we focus on those people who need help, and because these people are doing well in their career, making decent money, but very much occupied. So someone who doesn't have the time, skill set, or interest to do this, we help them out.
Okay.
And we help them out end to end.
Got it.
So, broadly speaking, yeah.
And any interesting insights that you've seen from this TG, or you did that research, so anything interesting that popped out?
One thing is, people don't want to talk to you till the time they want to talk to you.
Okay.
The moment they want to talk to you, you should be there.
Right. So they will discover you.
So, Discover is as in key. I mean, they are our clients, right? They already know about us, but they don't want those calls. Ki, hey, buy this, buy that. They don't want those sales calls.
Right.
They are smart enough. They are tech savvy enough that they can do things on their own. But the moment they are stuck anywhere, okay, and they need your help, you should be right there. It shouldn't be the case that they are, they have called you up, whatever your customer care number is, and press this, and after holding for half an hour, okay, everyone is occupied, we'll get back to you.
Yeah. No, I think that's in financial and especially the investment space, it really matters a lot that you're always available on a call.
Absolutely.
So, and what type of questions do you usually get from these users? What is the most, common point where people get stuck?
Stuck as in their own financial journey or whether selecting WealthUp?
No, so you have a set of users and you said that they reach out to you when they get stuck. So what are these common points where they get stuck? And
it's actually not so much about getting stuck. So I got a bonus. I have 5 lakh rupees lying in my bank account. What do I do?
Okay.
Or I got a promotion, more money coming in, so what do I do with that? Or I have a certain emergency of fund. I need these funds.
Okay.
What do I do with that? This is more on the, actually transaction side. Occasionally tech issues do come up. Okay, I'm not able to do this, do that. That is, no matter how good a platform you build, that will always happen.
Avoid.
So, those things also happen.
Got it. When you are helping somebody plan, is there any overarching philosophy, thumb rule that you follow that essentially makes you design a financial plan for somebody? Obviously, the nuances of it will vary from the person to person, their risk profile, where they are in their journey, etc. But what are some of the common thumb rules that you follow in terms of helping anybody design their portfolio? Let's say if I want to do that and I come to you, what will be your approach?
Okay, so as I said, first of all, we understand who you are today, financially speaking. Where you are, how much money you are making, how much you're saving, what are your current investments. We analyze your current investments, if they're performing well or not.
Okay.
So we have a tool for that.
Okay.
The ones that are not performing well, we ask you to exit it, taking care of...
So this tool is built by you?
Yeah.
And what all does it look at?
Mutual funds. It analyzes all your mutual funds, how it is performing. The performance, the diversification, if it is, because a lot of people, what we have seen generally is like 80-90% of their investments is in equity.
Right.
Okay. Now, I'm just talking about mutual fund. It may be the case that you have a lot more money lying in your fixed deposit.
Right.
Okay. Which is, of course, not something that I can, get directly, which we talk about. How is it that your overall investments are looking like, how portfolio is looking like, and whatever changes are needed to get to where you want to get to. Okay. That is what we start with. So, suppose you have 100 rupees to invest. Okay, so now exactly 100 rupees, that's 100 rupees. And of course, we know if it's a long-term, short-term, what kind of goal, what kind of investor you are. Okay, so X percentage should go in equities. X should go in, debt. It should go in, amount should be going in, say, gold. Within these categories, within these asset classes, there are further breakdowns, right? So if you're talking about equities, there are large cap, small cap, mid cap. So how is it, your money should be divided there? We help you with each of these decision-making. We tell you exactly which funds are the best ones. We, track those. We put money key, okay, this is where you should be putting money. After that, we keep monitoring it. Okay, as and when, your portfolio needs to be rebalanced. Right. Something is happening in the market. So we help you with, analyzing this.
Right.
Any changes, as I mentioned earlier, any change that is needed, we tell you. Okay. How is it that you can, what changes need to be made? Exactly. Okay, so you should be, Soumya, you should be moving 2 lakh rupees from fund A to fund B.
Okay.
And ideally, do it before 2 p.m.
Okay.
So we follow up. We make sure that you are doing it. As I mentioned, we also help you with the execution. We're developing better systems so that this execution part, whatever suggestions we are giving, that can also be easier. But we're doing that. This is on the investment side. One more thing here is we have also developed a model called AIM.
Okay.
Adaptive investment model. What I was telling you, about 10 lakhs versus 1 crore.
Right.
As the size of your portfolio grows, there are a lot more that can be done.
Right.
Okay. So as you are in that journey, and by the way, this 10 lakh and 1 crore is different for everyone.
Okay.
It's not.
Yeah, it depends on their lifestyle.
Like suppose you spend 2 lakh rupees per month compared to someone who's spending 25,000 rupees per month. It's very different, right? So that is also some adaptive investment model that we have, and your portfolio, changes based on that. This is on the investment side. But as we, as I mentioned earlier, we look at your finances overall.
Right.
So we have another framework that we have developed. It's called SAILcoin.
Okay.
SALECOIN.
Okay.
So SA is for savings. What is the minimum percentage? How much of your net income is it, that you save? As I mentioned, minimum 20% should be there. L is liquidity. how much money are you keeping in your bank account? Too little is bad, too much is bad, right? Then is emergency fund, extremely critical.
Right.
You need to have an emergency fund. Okay, but again, how much is it? Where is it? Okay, so this is the sale part. Then is coin. CO is for coverage, health insurance and life insurance.
Okay.
Very important. A number of times, people think it's just a waste of money.
Yeah.
Yeah, they do.
Especially the endowment plans.
Uh,
Those are real waste of money.
so when it comes to life insurance, you only need a term life.
Yeah, exactly.
Okay. So insurance is not investment.
Yeah, that's where a lot of confusion really lies with so many people.
It's such a common mistake.
Yeah.
But insurance is not investment. Keep them separate.
Yes.
Okay.
Coverage.
Yeah. So coverage is there. You need a health insurance of your own. You need a life insurance, and that is when in happens. In is investments, and ideally this is the order in which your finances should be following.
Okay.
Okay. I mean, today I have. So we have people ki. I don't like to take too much risk. Okay. Most of money is in FD, but I have invested some money in crypto, and that is something I'm just not able to understand. You can't take risk, and you are invested in crypto, whatever the amount is. I have invested in crypto. Okay, but that's.
But you have the risk appetite to do that.
No, you just said you don't want to take risk.
No, I'm talking about you have invested in crypto, you said.
I haven't. I found out about Bitcoin when it was 23 rupees, $23.
Okay.
Okay, I didn't invest in then. I haven't invested in today.
Okay. Is that because of not understanding the asset class too much, or you perceive it to be too risky?
Not understanding it well.
Yeah.
Have talked to a few crypto experts as well. We have brought a few on our podcast, but still not convinced enough to put money there.
No, so when we were doing user research, one interesting insight that we gathered was, especially for the retail investors at large, you can broadly classify their behavior into, there are like two very key themes that you can observe. One is they are very risk averse. So they'll put 90% of their wealth into FD, right, which will barely beat inflation. And at the same time, there's one aspect of their behavior which is extremely high risk taking. And so they operate in these extremes. So they'll either be too risk averse or too, high risk taking at the same time. So they'll actually gamble with something like a crypto where they'll expect it to maybe become 100x or 200x. But that'll only be probably 10-20% of their overall investments, and remaining is all just in FD. So it's very interesting how people in India
absolutely. So actually, I had a client. Short story. I had a client. When I started talking to him, he had invested some 1.5 lakh rupees in crypto, and 5 lakh or so just lying in his account. Okay, FD, partly bank account. And there was like, if I look at the overall portfolio, you have very high exposure to crypto. Doesn't make a lot of sense. No, I'm not going to, Ankit, let's not talk about that. That is something that I'm not going to touch. It has given me very good return. I'm not going to touch that. This is when Bitcoin was around 57,000.
Oh, okay.
Before the crash.
Yeah.
I was like, all right, let's talk about 5 lakhs. We worked on that, started doing it. And about a year or so later, just on the catch up, and I did tell him, okay, so the 1.5 lakh that you have, that's a lot of exposure.
Right.
You should sell some. If you are in a profit, sell some so that you can just rebalance it. No, I'm not going to touch it. I was like, okay. 1 year later, when we are talking, so okay, that's at a loss. Actually, you know what? You should just write it off. Don't even consider that it exists.
Oh wow.
I said, all right.
Yeah. No, so it's very interesting.
Yeah.
It's something which is beyond all of our wits, but that's how.
But when it comes to finance, a lot of us think that we are taking very logical decisions.
Yeah.
We don't.
But it's very emotional.
Very emotional.
Very emotional, yeah. No, yeah, I think we can go on and on this, both of our favorite topics.
Yeah.
But before we wrap it up, I just want to know where WealthUp is headed now. What next? What lies next?
So what we are trying to do, Soumya, is for people who want help with managing their finances, we are trying to bring everything on one platform. One interface through which you'll be able to invest in a number of things. Okay,
so you can actually do the investment there also on the platform.
Yeah. So suppose when you have shared with me what's your PAN, what's your date of birth, you have completed your KYC. Why do you need to again go on? So when you're buying another product, you'll
have to do the same thing. Yeah.
What's the point, right?
Yeah.
So that is what we are trying to solve for. Okay, the convenience. Okay. what we are very clearly focused on is customer care, customer convenience. And if you have shared one information, it should be right there. It's also like when you are talking about your finances, if it is too spread out, it's difficult for you to remember that you invested 50,000 rupees in XYZ
Right.
like 3 years back, and you don't even know if it is there. Everything will be on one platform, completely integrated. You can transact, track, and form strategies there itself. Because when you have a clearer picture, complete picture, it's easier for you to do it. And again, as I mentioned, building convenience around it. Ki when you are getting this suggestion, when you should be moving X amount of funds from A to B, how is it that we can make it the easiest? You can do it on the go, even when you're sitting in the office. It should be super quick.
Correct.
Like just few taps and it's done.
Right.
So building everything around that convenience piece.
No, I think that's important. Distribution is a very important problem to solve, and the more we can create awareness, help people understand, and actually make it accessible, the better it is. I think the financial literacy will start improving right there. Thank you so much, Ankit, for your time today. It was lovely chatting with you. And
thanks for inviting me. It was a pleasure. It was a
yes.
very nice conversation.
So one last question before I let you go. I think I ask all my guests is, what is the one book that you're reading right now, and what is your normal genre of interest?
Mostly self-improvement kind of books. What I'm reading right now is a book called The Great CEO Within.
Okay.
Just how just started early section. So how you can be a better professional, just managing your time better. How you can be a better leader is something that I'm yet to reach to, but I'm finding it very, very interesting. And yeah, this is generally self improvement kind of sections or kind of genre that I read.
Got it. Interesting. Thank you so much for coming again, and
pleasure.
thank you everyone for listening to this. We'll catch you in our next episode. Till then, take care. Bye.